If you have ever wondered how big companies protect themselves from crazy price swing while still making the consistent profits, you're about to discover the same strategy they use, and the best part, you can use it too. Hey everyone, I am Rohit, and today I want to introduce you to futures trading in the simplest way possible. So let's take an example of McDonald's and oil. So here is something interesting. The burger you eat at McDonald's costs the same whether you buy it in January, February, or at the end of the year. But here is what most people don't know. The oil which they use to fry those fries, the price of that oil can swing from 30 to 50% in just few months. So how do you think McDonald's keep their menu prices same and stable while the cost of raw materials are going crazy? Simple. They don't wait or hope for cheaper oil prices. Instead, they make deals months ahead of time. Yes, McDonald's might agree in March to buy the oil at $75 per barrel for December delivery, no matter what the actual market price is in December. If oil prices shoots up to $90 in December, the McDonald's still pays $75 a barrel and save $15 per barrel. But what if the price drops to $60 per barrel? They still have to pay the agreed upon price, which is $75. Here they are paying $15 more than the market price, but they had price certainty for their business planning. Now, here is where it gets interesting for all the futures traders. Those deals the McDonald's make, they're called as futures contracts. The interesting part is they don't just trade privately between McDonald's and oil companies. These contracts trade on public exchanges where anyone, including you and me and all the retail traders, can participate. Yes, you heard that right. So when McDonald's is locking in oil prices at $75 and you believe oil will go to $90, you can potentially profit from the same price movement till $90. That's what future trading is. It's simply buying and selling of contracts for commodities or indices or any other asset at a pre-agreed upon price for the future delivery. You are essentially trading the same risk management tool that a billion-dollar company uses every single day. And that's exactly what we are going to explore together in this complete beginner's guide to futures trading video. Now, one thing you must know is future trading is bigger than forex market. The possibilities are endless. Why it's better than forex? This we will understand in our upcoming videos. Let's understand a few important things like what are assets, ticks, and contracts, which will lay a strong foundation in your futures trading journey. So if you're someone who's coming from forex trading, these assets on the screen would look familiar to you. But as you are stepping into futures, these are symbols. You need to know what exactly each symbols mean. So ES is S&P 500, NQ is NAS 100, YM is US 30, gold is GC, which also stands for SAUUSD, CL stands for crude oil, 6B stands for GBP USD, and 6A stands for AUD USD. So write this down or take a screenshot. This is super important. You need to remember these indices and trade accordingly in the futures market. Again, in futures market, you can trade currencies, index, and even commodities. It's a lot similar to CFD trading, but here we are trading on more regulated platform and more secure one which can't be easily manipulated. So now, as we already know what this symbol stands for, let's understand the contract month code. Now the contract month code is equally important and a lot of new futures traders don't understand this. You need to update your symbol, as in roll over your contract and add new as per the particular month throughout the year. So let's take a quick look at it. So let's say you're trading NQ, which is NAS 100, and you have a symbol which is NQU5. So here NQ stands for symbol, which is NAS 100, U stands for monthly expiry, and 5 is for year, which is 2025. So what this means is this contract will expire in September, and when the October comes, it's not gonna be NQU5, but we will use entirely new, which is NQV5. Here V stands for October contracts. So as you can see on the table, we have specific monthly code from January to December. You need to remember this. These are fixed for each month. You have to choose the most recent symbol because that's where you will find maximum volume to trade. So take a note. You have to constantly update your charts whenever the monthly contract expires. Now that we know what are the assets that we can trade, let's understand what are we actually trading. So in futures market, we are trading contracts. Okay. This contract word is very important in futures trading. Now you must be wondering what are contracts. So in simple terms, contracts are basically an obligation to do something which two parties agree, which they have to follow. So by definition, a futures contract is an agreement to buy or sell a specific asset at a pre-decided price at a future date. So what does this mean? So let's say if you're gonna buy NQ, which is NAS 100, and you decided to buy 5 contracts which you're expecting to go up. So that's the future contract you're buying at a lower price for the price to go higher and make money on it. And if it doesn't move up and instead goes down, you're going to lose money. And as per the contract, you will only make money when it goes up and lose money when it comes down. Now, it's not like trading Forex currency where we trade the prices which is going up and down. Just remember, here we are trading contracts only, and there is a huge difference between trading contracts and trading the actual currencies whose price goes up and down. So now, as you're a bit familiar with futures trading, let's talk about trading hours in the futures market. Again, this is super important. You can pause the video, write this down in your notes, or take a screenshot. So the trading hours on the screen is as per US Eastern Standard Time. And if you are from India and you want to get this in IST, comment IST and I will share you the exact timing as per India Standard Time. So let's quickly go through the trading hours for all the indices. So for equity indices as well as energy and metals, the trading hours is same. There is no difference in the trading hours. The market opens at 6 p.m. on Sunday as per Eastern Standard Time and closes on Friday 5 p.m. Eastern Standard Time. Every day the market is closed just for 1 hour, which is 5 p.m. to 6 p.m. Eastern Standard Time. So now you might be wondering, the market is open 23 hours a day. So what's the best time to trade? So as per me, the best time to trade is 9 a.m. to 11:30 a.m. EST. This is because of 3 reasons. Firstly, the New York opens. Secondly, the volume is high. Thirdly, it's gonna be the most volatile session of the day. You will get clean moves, but remember, New York session usually have a lot of news. So you have to be very careful while trading in futures market. Again, this is all about trading hours in futures market, and this is in EST. So always convert it as per your country's timing and then trade accordingly. A pro tip: try not to hold the futures positions overnight unless you're trading with a bigger capital and you're a swing trader. So that's all for the video, guys. Hopefully you liked the video and got some knowledge on the basics of futures market. If it did, hit the like button and comment down if you want the part 2 where I will cover more advanced concepts in future trading. Thank you for watching. See you in the next one.